They had to enter into a very competitive market, which is the banking market and investment market. And the quickest way to do it is obviously through loans, and personal loans specifically, because you can grow the accounts much faster and Welcome back, investors. Today we're going to talk a little bit about SOFI with earnings around the corner. I want to talk about book value and how we value banks. But is SOFI your traditional bank, or do we need to look at it a little bit different here? I'm going to talk about the pros, the cons. I go into everything with an open mind, so I try not to be biased. I try not to hype. I try to let math solve a lot of the equation here. So let's dive into SOFI. Now, looking at SOFI, the one thing I really want to hone in on is the flywheel business model here. It's a one-stop shop, and there's multiple transactions that can take place with one client, and we're going to see that through their earnings. Multiple ways we can value a business. When it comes down to a bank, we want to be looking at book value of the bank. So how do we get book value of SOFI? So I pulled up SOFI's annual report, was breezing through it really quick. How we can get a quick understanding of their book value is going to be taking the total assets here of $30 billion and subtracting out total liabilities of $24.5 billion. So we take that 30 billion in assets and subtract it by the 24.5 billion in liabilities, and we get roughly a $5.5 billion book value here. As of this recording, SOFI is trading right around $8.3 billion market cap. It jumped up to another 3% after hours. So let's just round up to $8.4 billion market cap. We take that $8.4 billion market cap and divide it by the $5.5 billion book value here. We get a book value sitting right around 1.53 times. We can double check our work here and see that that's pretty accurate here. Book value sitting around. Where I think SOFI has unlocked potential is definitely going to be on creating more ETFs and really focusing in on becoming a assets under management type business model. And that's where I think you can unlock a tremendous amount of value in SOFI. And I've talked about this a bunch of different times on the channel. This is where I think I get more interested on SOFI's platform. Now, I know they're making revenue multiple ways, but the main way that they're making their revenue is through loans. And if we think about how their loans are distributed, the main focus on their loans is going to be personal loans. The problem with personal loans is it is economically sensitive. So when I look at SOFI's business, and I think that if we go through an economic downturn, a lot of their business is created off of student loans and personal loans, which means that there is no true asset backing up these loans. And I know they underwrite high quality individuals, but I've looked through their underwriting guidance and they are underwriting people with below average credit scores. So they are susceptible to an economic downturn more so than your traditional big banks that have a broader balance sheet like a Bank of America or a JP Morgan. So when we look at what Bank of America and JP Morgan trade for on a book value, Bank of America trades right around 1 times book value, currently sitting at 1.12 times book. The reason why I'm using book value when it comes to a traditional bank is book value is the most accurate way to follow the stock price. When we saw interest rates skyrocket and banks sell off and some banks collapse, so there was a lot of unrealized losses getting priced into the stock. What ended up happening was when there was a bank scare, we saw that the bigger banks actually got bigger because a lot of the bank runs happened to smaller and or community banks, and they ended up going to your Bank of America and JP Morgan's, which grew their book of business. And now you're starting to see that premium being priced into their book value. And same thing can be said about JP Morgan trading at 1.8 times book value. Historically, around 1.5 times book is what you see for JP Morgan, but with it really separating itself from the other big banks on the way it's growing its earnings per share, the way it's handling its balance sheet, and it's how it's handled this downturn and turmoil of higher interest rates. JP Morgan is obviously where we're going to pay a premium, which is going to bring us back to SOFI. Now that we have an understanding of what JP Morgan and Bank of America are trading for, we're seeing SOFI trading for what I would consider a substantial premium. Most banks that are not in that higher tier quality of your JP Morgan and Bank of America are going to trade under 1 times book value. Now, a lot of people are going to talk about paying a premium for SOFI because of the growth of the book value, but here's where I want you to pump the brakes a little bit here. As we stated, book value is going to be total assets minus the total liabilities. And when we go through SOFI's quarterly earnings, I want to point out a few different things here. Number one, the actual book value is not growing that fast. And number two is going to be dilution. They went from 900 million shares outstanding to 945 million shares outstanding. And assuming if we keep this type of increase in shares going, we're going to see it pushing over 1 billion shares outstanding, which is watering down the true growth of their book value. Now that I kind of have an understanding of what seems to be a fair market for a company like SOFI, if I were to take everything out of the equation and say that this is a company that's dealing with a lot of personal loans, not a lot of assets backing up those loans, and that through an economic time, there could be a high default rate. And so do we want to pay a premium for that type of book value? And I personally think the answer is no. I would rather own a book like Bank of America or a book like JP Morgan in a downturn. But here's where SOFI gets interesting. I've been getting a lot of emails from SOFI on their investment aspect of their business. And this is where I want to see them grow the business, because I don't think they have a strong portfolio when it comes to the lending side, which I do think they'll eventually grow out. They had to enter into a very competitive market, which is the banking market and investment market. And the quickest way to do it is obviously through loans, and personal loans specifically, because you can grow the accounts much faster and the underwriting process is a lot less comprehensive. So you can acquire clients much faster through small personal loans. Then you start offering mortgages, investment, and that's when you start building out this flywheel. So I understand what they did, and I understand how they got into the competitive banking sector and how they were able to acquire so many clients, because of the approach that they've taken. But where they have the ability to unlock value is going to be on the investment side of their business and getting quality loans now, which would then be more of your mortgage loans. So if we're to look at it like a Charles Schwab here and look at what their book value goes for, Charles Schwab's going to trade between 3.5 to 4 times book value pretty consistently here. You pay a premium because there's not as much economic sensitivity with a company that focuses on more of your investment side of the portfolio. And so you can pay a premium for that. And so if we think about a book value of SOFI trading at right around $5.5 billion book value, and we put a 3.5 multiple on that, then we're looking at pretty darn close to a $20 billion valuation for SOFI when and if they can get more of that investment side of the business growing rather than those personal loans. And so this is where I see the big opportunity for SOFI more longer term here. Now, what I do believe is going to happen is the SOFI is going to most likely beat on earnings. It usually has a good earnings reaction and then a pretty significant sell-off. But I do think that they could be posting much stronger numbers than everybody's anticipating, and I think it's going to surprise to the upside most likely. And the reason why I think it's going to surprise to the upside is their earnings per share, I think, is going to start going positive here. We can see the trajectory of earnings per share going from negative $4 a share to negative $1 a share to negative 40 cents a share to negative 36 cents a share in 2023. And so I do think they're on the precipice of having positive EPS, which is then going to cause a substantial amount of interest into the stock. And obviously it's going to kind of solidify some of the bulls that the company's heading in the right direction, and there's going to possibly be a euphoric push for the stock. But I want to reiterate that the book value of the company has really not been heading in the right direction for multiple reasons. Number one, book value is just not really growing, even though customers are growing and revenue is growing. And number two is the dilution factor here. There's been a tremendous amount of shares added to SOFI stock, and I do think this will slow down, and I do think earnings are going to go positive, but the main focus is going to be transitioning the business to more, in my opinion, of AUM, building out ETFs. That's where I think you unlock a lot of potential and value for the company, along with getting better type of loans on the books. So most of you are probably asking, well, where do I think SOFI should be trading? And I've done multiple videos on SOFI, and I think anywhere between $5 to $6 makes a lot of sense for SOFI. If you reached at $7, I completely understand. Now, of course, this stock I think is going to explode, get crazy. I think there's a lot of short interest in it. So it's going to be interesting to see what takes place with SOFI's earnings, but kind of want to give you guys a breakdown of what I see and the potential I see for SOFI. If it did focus more on those assets under management, building out ETFs and creating a large presence on the investment side, I do think you can start looking at doubling the book value here. But because of the quality of loans that it has on its books, it's not anything that's super impressive to me, even though I love the flywheel effect of the business. So I'm really torn on this company. I've been torn on it for a long time. I don't like the dilution either. So there's a few things I want to bring to your attention on SOFI. Hopefully you guys enjoyed it, and we will see you in the next one.